I want to make something clear before we get going here. I am not an expert in Bitcoin. I don't own Bitcoin. I've never traded it for myself or for client accounts. But I have studied it quite a bit. And recently, the MIT had a distinguished lecture series that was really good about Bitcoin. The Chartered Financial Analyst Society in Boston had one. And so I'm learning a lot of this. I'm trying to pass it along to you. But here's some of the things that have become clear to me. And one is the question of when will Bitcoin be accepted as a true currency? Before a currency becomes desirable, widely accepted, it has to have three attributes. So it has to be anchored by a strong economy. The US dollar, for instance, is the strongest, the US is the strongest economy in the world. It has to have stable politics. Again, using the US dollar, our politics may seem crazy, but they are more stable than in other areas of the country, unless you consider some dictatorships would have this appearance of stability, but they're really not. And typically a strong military is something that the strongest currencies also share. The other things that something has to have to be accepted as currency is a store of economic value. You want to know that if you get paid $1,000 for your labor on Monday, on Tuesday, you can buy $1,000 worth of goods with it, and it won't fluctuate wildly. It's a stable store of value. And then it has to be easily transferable. So let's look at a couple of these things and talk about Bitcoin. Since 2014, it appears that about 3/4 of all transactions in Bitcoin have been investors, not people doing commercial transactions in stores, but people trading it for speculative reasons. Despite what you've heard, crime has been less than 10% of all transactions involving criminal enterprises, and payments are also less than 10% of all transactions. In fact, less than 1% of worldwide vendors will accept Bitcoin. And in fact, it's a very small percentage of 1%, a small fraction of 1%. So it really doesn't have wide acceptance yet. So we're not there. If you want to transfer Bitcoin to someone else, you make a purchase, it actually takes about 15 minutes to settle that transaction for the other person to actually have their Bitcoin. You compare that, well, let me back up. Imagine you're standing in the grocery store line and you want to pay for some groceries, and you put your credit card that's backed by Bitcoin in the machine, and it takes 15 minutes to approve your transaction. People aren't going to wait that long. When you compare this to Visa, MasterCard, even a bank electronic funds transfer, they happen in seconds. And so Bitcoin has this hurdle to clear before transfers are really going to be easy enough anyway to make it a widely accepted currency. There's also transaction costs with Bitcoin. Now, there's a term called Bitcoin miners, and these are the accounting functions in the background. And they're huge computer farms that have to agree that a transaction is legitimate. It takes several miners to agree before a transaction will actually be recorded in what's called the blockchain ledger that is can never be changed after that. These miners are paid in a tiny fraction of Bitcoin for each transaction that they verify. Now, the structure of Bitcoin is that only 21 million Bitcoins can ever be in existence. It's the most that can be mined. When 21, right now, I think there were between 18 and 19 million, and it's going to be a number of years, probably a long time, before we get to that point. But when 21 million Bitcoin have been issued, no more can be issued. And the miners then are going to have to be paid with transaction fees in some other currency, because the Bitcoin, it can't be generated by their activity. Now, remember, you have to have multiple miners that agree. So you're going to have multiple transaction fees compared to Visa and MasterCard that has only one transaction fee, and typically it's paid by the vendor. So there's, again, a significant inefficiency in transferring Bitcoin that I think is going to be a big hurdle in it becoming widely accepted as a currency. I mentioned a stable store of value. You want to make sure that when you get your Bitcoin, when you turn it into dollars or groceries or whatever you want to spend it on, that you get that same value. And This chart, I just started putting this presentation together on May 19th, and I looked, and it happened to be a period of significant volatility for Bitcoin. And this chart shows that at 1:47 p.m., Bitcoin was valued at 37,033. 15 minutes later, it was down to 33,856. Now that's a 15% decline in 15 minutes. So imagine you sold your car to somebody for $37,000 worth of Bitcoin. And then by the time you could get your Bitcoin in your account and transfer it to dollars, it was only worth $33,000. You'd feel a little bit ripped off. Now, if you're on the other side of the spectrum, you could have benefited by that. But this is not what people use a currency for. This is a speculative investment, a speculative asset. It doesn't act like a currency because of this. It's going to be a while. Matter of fact, Elon Musk, during that same period of time, about a week before I generated that chart, announced that Tesla was no longer going to accept Bitcoin for payments for cars. They had a few months earlier said we're going to take Bitcoin in payment. They got burned pretty good because by that time the Bitcoin was down about 33% from where it had been in its high a month earlier. And so people using it as currency are going to get burned, and they're going to back away from it. In comparison, this is a 10-year chart of the US dollar, and there is some volatility here. These big ups and downs are about 10%, these big ones, but they last for, this is 2 or 3 years, and this is a year and a half. So although there's some rise and fall in the value of the dollar versus other currencies, and that's how you measure a currency. You can't measure it by itself. It has to be compared to something else. There's some volatility, but nothing like Bitcoin. If you want to look back right now, we're here. 3 years ago, we were about the same value. Everybody says the dollar's going to hell in a handbasket. I don't see that. 5 years, we're actually a little higher now than we were 5 years ago, and we're quite a bit higher than we were 10 years ago. So although the government's been printing quite a bit of money, the wheels don't appear to be coming off the value of the dollar yet. So the people who are preaching its demise probably are a little too soon. 50% swings in the value of Bitcoin are common. We had a 53% drop from April 14th, and that was to May 19th when I was doing that chart. It's bounced up a little bit since then. One of the other problems is the stigma that Bitcoin has due to the incredible energy consumption it takes to run these huge computer farms that do these calculations to balance this blockchain and verify transactions. The Bitcoin miners as a group use 149 trillion watt hours of energy. I think that's on an annual basis, if I remember correctly. But that compares to whole countries like Sweden, Malaysia, Egypt, Poland. The environmental movement is gaining strength. Many people are becoming more and more environmentally conscious, and this is going to be a problem. It's going to create a big headwind for something like Bitcoin to be accepted by that group of people as a currency, or perhaps even as a speculative investment. Bitcoin's carbon footprint is equal to the country of New Zealand. Again, another strike against it environmentally. If we look at who owns Bitcoin, the top 1% of holders hold 85% of Bitcoin. Now, we don't know if these are individuals or institutions. There's a lot of anonymity in holding Bitcoin, but the Cambridge Center for Alternative Finance has been able to track these down by location, not by individuals. So they can tell it's one person or one entity holds 85%. The top 10% hold 97% of Bitcoin. Now, when I buy stocks for our future technologies model, one of the things that I look at is how much of this stock is owned by institutions. If an institution owns 90 or 95% of a stock, they're really no longer potential buyers. They are huge potential sellers. And we have to remember the market, the value that we look at as a market value is only a reference, only referring or a reflection, I guess, of the balance between buyers and sellers. So in this case, we have a huge imbalance of these potential sellers, and less than 3% is held in the smaller investors' hands, which tend to do a lot of the buying that are driving the price up. So this is a real caution to me. I would not be a buyer now because so much of this is in the hands of sellers. And if just a few of these top holders want to liquidate Bitcoin, it can swamp the market entirely because they own so much of it. So one of the things you hear from Bitcoin aficionados is that I don't trust the government. I want to hold mine in Bitcoin that can't be manipulated. Well, with Bitcoin, you really have to trust the receiver of your payment. What happens if they don't send you your goods, or what happens if they say they didn't receive the payment and demand the goods back? How do you prove it with all the anonymity and everything else? It's a very difficult question. One of the other things, I just, matter of fact, while we were starting this presentation, I looked up this point here. The majority of the firms, 6 of the firms do about 2/3 of all the mining, and 5 of the top 6 are Chinese-oriented firms. All of the top firms are in countries that subsidize electric rates. So these firms are really not paying for their electricity. The government is, or the socialized electrical infrastructure is. And this is a problem because governments can affect the market. In 2016 and then earlier this year, this is what probably led to one of the things that led to the decline from 53% decline we've seen just in the last few months in the value of Bitcoin, is that China is discouraging their individual citizens from owning Bitcoin, which is a little hypocritical since 5 out of the top 6 Bitcoin miners are located in China. But they can have huge effects on the market. One of the other things we have to remember is that the only way the structure of Bitcoin can be changed is if a majority of the Bitcoin miners agree to a change. Now we've got over 50% of the miners now in China. And if the Chinese government says, hey, we're going to change this, what do you think those miners are going to do? They're going to change the structure of Bitcoin. So if you don't think you trust the government, if you trust the Chinese government more, well, maybe you're going to be getting what you want. But I don't think it's a good play. Anyway, in conclusion, I don't think Bitcoin is ever going to become widely accepted as a currency. There's just too much limits on the use in transactions. It's a poor store of value. It's totally unproductive, doesn't produce any interest or useful functions while you hold it. And there's really no regulatory protections. If the miners want to change it, who's going to try and stop them? So I think Bitcoin will continue on as a speculative asset, but it won't become a currency. It's just the structure does not allow the change.